Hello and welcome. You're watching What Did You Miss on Bloomberg Quint Live, India's first digital live streaming news service. And these are the top headlines that we're tracking at the hour. Bharti Airtel and Reliance Industries helps the Indian market snap a 3-day losing streak. And a one-time gain of 391 crores aids Hindustan Zinc's bottom line in the second quarter, while the country's largest electrical home appliances maker Havells India beats estimates. Reliance Industries' market cap crossed the 6 lakh crore market cap in intraday trade today. And the Election Commission is yet to announce the dates for the Gujarat Assembly polls, but political parties have started campaigning in full swing. A day after Prime Minister Narendra Modi, Congress Vice President Rahul Gandhi is in the state today to attend an OBC rally. And Shinzo Abe is set to become Japan's longest-serving prime minister in the post-war era after his election gamble pays off. All right, let's take a look at how the markets wrapped up in trade today. We have Neeraj Shah, who's joining us with all the equity action witnessed on the street today. Neeraj.
Well, it was an interesting day of trade simply because the last 1 hour of trade marked the resurgence of the Nifty Bank, and we've been saying about how the Nifty Bank needs to perform for the Nifty to do well, and that's what happened today. If you look at the Sensex, then you see 1/3%, yes, but the Nifty Bank 1/3%, the Nifty 50 almost identical moves in percentage terms, and that was really the reason why the markets did what it did in the last 1 hour of trade. Having said that, there were a bunch of other performers. I think the Jio tariff hike led to all telcos, and I'm classifying Reliance Industries as a telco out here for today's session. But Reliance Industries, Bharti Airtel, there was also Idea and Arcom, which did really well for themselves. I think the Ultratech numbers really led to some uptick for that one, but it also led to Ambuja Cements, which comes out with its numbers tomorrow to do well. So cement stocks, especially the large ones, did reasonably well for themselves. A bunch of other mid caps. Now, there are multiple factors to this steel company's moves. Companies eyeing Bhushan Steel. There's some verdict that is likely to come out for SR. For manganese companies, some court verdict with regards to reducing the cap on mining. So all of these names, be it the steel names or some of the manganese names, Uttam Galva, for example, was up 10% as well. So doing very well. And add to this pack was this mid-cap, small-cap real estate. Suntech Realty, 17%. Kolte Patil, 18%. Sobha, Purvankara. A clutch of these mid-cap real estate names had a fabulous move going into today's session. Earnings impact was seen for Havells. It actually had a fairly decent day, but post the numbers came off. And Graphite India, well, maybe because the stock has moved up a lot already, couldn't do much, but exceptional set of numbers by Graphite India in particular. EBITDA moving up some 8x, profit up substantially as well, revenue up 35%. So this one had a field day in trade. So all in all, I think a select band of companies with results came out and performed as per the results. But you would have take heart from the fact that the Nifty Bank did so well, and as a result of that, the index was able to move higher. One just hopes that this uptrend continues.
Thank you so much. Thank you so much for that, Neeraj. So banking stocks, real estate stocks were yet another pack which had a fantastic rally. But shifting focus to earnings now, an exceptional gain of 294 crores aided Hindustan Zinc's bottom line in the second quarter, which would have otherwise just about managed to meet estimates. Nikki Mirchandani standing by to take us through all the main numbers. Nikki.
Healthy set of numbers coming in from Hindustan Zinc. Net profit has grown came in at 2,545 crore, which is almost in line with Bloomberg consensus estimates of around 2,300 odd crore. Revenue at 5,300 crore again was in line with 5,500 crore number that we were working with. Net profit had a one-time gain of around 291 odd crore, which was on account of royalty, which was reversed back, which showed on the credit side of the profit and loss. And despite that, this was pretty much in line with the estimates. The revenue has risen as much as 52% year-on-year basis, while EBITDA grew as much as 46%. Margins also did contract 57% as compared to 59% earlier, but this is pretty much in line with what the expectation was. In spite, I say it's a healthy set of numbers because the metal cost of production per ton before royalty during the quarter increased 17%, and despite that, we're seeing the margins coming in at 57%. And the company has reiterated the production guidance, and it is going to be paying a 2 rupee per share interim dividend. The higher volume combined on strong strong zinc as well as LME prices have led to this good set of performance coming in from Hindustan Zinc. Volume growth in terms of sales number pretty much in line. Zinc, we have seen a growth of around 30% YOY and 1.6% sequentially. Lead sales volume has also risen as much as 32% YOY, 17% sequential basis. Silver volumes are pretty much higher than estimate that we were working with, Shraddha.
All right, thank you so much for that, Nikki. The stock ended with losses of nearly 1.5%. But Havells India is also another one that reported its profit, a 17% jump in the September quarter net profit, with the cables business aiding that operational margins. What have been the key factors here at play? Well, Agam Vakil joins us with more on that. Agam, over to you.
Thanks, Shraddha. It's a mixed quarter and it's a miss on the top line. However, when it comes to the bottom line, it is ahead of street expectations, and also when it comes to margins, ahead of consensus. Well, a couple of factors that play out here. Firstly, when it comes to their top line, we have seen sluggish demand when it comes to its cables business. Do remember that about over 30% of its revenues come from this area. However, we have also seen an expansion in margins because of commodity costs largely at play, again in the very same segment. Lloyd's business is once again a surprise, because we were expecting that segment to dilute business as business's margin overall consolidated numbers for Havells, but that has not come to be. And while we have seen about 270 crores in terms of revenue, we have also seen margins of well over 20% as against lower teens. So these are the two important factors which have led to an operational beat, and on the whole also some operational efficiencies come into play, because of which margins have expanded. On the whole, beat when it comes to its bottom line.
Thank you so much for that, Agam. And we're also going to talk about Indiabulls housing numbers. Numbers are just out yet. Just a quick check on what we were expecting. We were expecting to see the net profit growing by 20% at 822 crores. Loan growth was seen at about 27 to 30% crores, whereas gross NPAs were expected to come in at 0.8%. So the asset quality was expected to remain broadly steady from the last quarter. So the net profit has come in at 861 crores versus the number of 822 crores that we were working with. So a clear beat as far as Indiabulls Housing Finance bottom line is concerned, 861 versus 822. We also have to understand or what the street is mostly going to be focusing on is going to be the continuity as far as the AUM growth is concerned. We were expecting the numbers to come in about 27 to 30%. So the AUM growth trend, the company has been seeing the 25+% sort of a AUM growth number over the past few quarters. So it will be important to watch if they've been able to manage that, especially in the light of RERA and the recent slowdown in housing loans. We're also going to be tracking the incremental spreads given the sharp cut in the home loan rates, but net profit growth of 25.8% is what we have now. Asset quality as far as the LAP and non-mortgage or the corporate portfolio is concerned will also be watched, but we are being joined now by Indiabulls by Mr. Manish Oswal, senior equity analyst at Nirmal Bang. Manish, I know there are not too many details that we have with us at this point, but when it comes to the net profit number, it is coming at about 861 crores, so a clear beat as far as your expectations were concerned.
Yes, I was expecting 832 crores of PAT and NI of 1361. Both the numbers, it is a beat, and even the provisioning number, which is part of other expenses, I believe, and that number is quarter to quarter is down. So overall, PNL looks very strong and beat on all the parameters.
Manish, any other thing that you noticed in the earnings which really stand out?
I mean, fee income side and loan book growth is very strong, and which they maintain quite some time. And secondly, in terms of especially the loan against property portfolio and the developer portfolio, looking the provisioning numbers, that portfolio should held up well during the quarter. So there's no concern on the LAP and the developer portfolio, and the individual housing loan portfolio, as we all know, is growing pretty well in the market, and Indiabulls Housing Finance is doing better than the market and growing much faster than the housing market. So very satisfactory number, both the balance sheet and the P&L.
And anything specific that you're really going to be watching out from in terms of the management commentary?
So one is the guidance on the second half, post the GST and the sentiment of the demand, and how they see the demand outlook for the second half. And secondly, do they see concern on the LAP and the developer portfolio in any particular region or developer particular account? And third is the overall cost of funds movement, because many of the banks migrating to the MCLR, and that benefit still yet to receive by many borrowers. So that benefit is if still there for Indiabulls Housing, we need to see from the management. So these are the few things we can watch out from the management commentary.
All right, thank you so much for joining us with your thoughts, Manish. So that was Manish Otswal from Nirmal Bang. Clear beat as far as Indiabulls housing finance numbers are concerned. But moving on from one Nifty company to another, the biggest listed entity in the country has only gotten bigger. Now, today, Reliance Industries became the first Indian company to hit a market capitalization of 6 lakh crore rupees in intraday trade. Somit Sarkar is standing by with an interesting chart on the big yardsticks the oil and gas and now telecom giant has crossed. Somit.
So it took around 3 months to hit the 6 lakh crore on an intraday basis from 5 lakh. It had hit 5 lakh in July 2017 and it hit 6 lakh intraday on October 27. So let's see the other landmarks that the company has hit on market cap basis. So it crossed 1 lakh crore market cap on August 2nd, 2005. Then it did 2 lakh on April 2007. Then in just 5 months span, it did 3 lakh crore market cap. And then just in 1 month time period, it crossed from 3 lakh to 4 lakh crore market cap company. And after that, it took nearly 10 years to cross that 5 lakh crore mark and 5 lakh crore market capitalization mark. So what are the reasons that has led to this 6 lakh crore market capitalization of the company? So first would be the completion of CAPEX plan. Now the company is on a verge of completion of its capital expenditure plans, and most of the benefits of this expansion plans are going to come in from the third quarter. So this is one of the reasons. Second is the rising GRM. Now the Singapore gross refining margin, that is the Asian benchmark, has been rising, which is favorable for Reliance Industries. And in this period, the GRMs had touched around $11 per barrel mark, which was the highest in the last 2 years. Third reason would be the bonus share. Now, the company declared bonus share issue in this period, which was sentimentally positive for the stock. And last but not the least is Reliance Jio. Now, Reliance Jio is one of the major factor why Reliance Industry has been rallying in the last few months. And the company also came out with its financials and it declared an EBIT positive in just 3 months of commercialization. Now, recently it also revised its tariff plans, which suggest an increase in its average revenue per user. So this is an interesting fact which shows that how Reliance Jio is important for Reliance Industries. Now, since the announcement of operations of Reliance Jio, that is on 1st September 2016, Reliance Industries has gained a market cap of more than 2,60,000 crore rupees, which is more than the investment that it has done in Reliance Jio. Now, in Reliance Jio, they invested close to 2,50,000 crore rupees. So this clearly shows how what role Reliance Jio plays for Reliance Industries as of now.
Interesting statistics, Somit. So, in a way, they have already recovered their investment in Jio. But staying with Reliance Jio, Bharti Airtel and Idea Cellular registered strong gains in trade today after the latest telecom operator decided to decrease the validity of its offers. Now, this basically means that the new entrant has dialed down competition a little bit and incumbents are expected to benefit as well. Somit, you track the telecom sector closely. What do these tariff hikes mean for the industry?
So now the new tariff plans have come in for Reliance. They have lowered the validity period for most of the popular plans, and they have introduced a new plan. So if you see for the 399 plan, they have reduced the validity to 70 days from 84 days, which is resulting into an effective rise in its average revenue per user by 20%. When you see the 509 plan, they have reduced the validity to 49 days from 56 days, which has resulted into a rise in ARPU of 14%. Then they have introduced a new plan of 459, which has a validity of around 84 days. Now this was the prepaid plans. Coming to the postpaid plans, in the postpaid plans, if you see, they have lowered the validity to 30 days from 60 days, which has resulted into a rise in the average revenue per user by almost 100%. So what does it mean for the industry? Now there would be a pricing discipline that would come in the industry, which was not there in the last few quarters, and because of which all the telecom operators had seen a fall in their revenue. So irrational pricing would go away and revenues would get stabilized now. Also, incumbents who are charging lower charges compared to Reliance Jio would now take a price hike and to match the tariff plans of Reliance Jio. And the listed telecom players like Airtel and Idea had seen their average revenue per user decreasing for the last 3 and 4 quarters, but now they can expect some stabilization over there. Now ICICI Securities is saying that in Q2 FY18 you can see the average revenue per user to bottom out, and going forward there would be a reversal in trend in the average revenue per user of all the telecom companies in India.
All right, thank you so much for all of those details, Soumit. So that's telecom, which has been buzzing off late. And of course, you have some market experts like Pashupati Advani who believe that it might be time to start looking at some of the telecom companies, especially Reliance Industries. But on the IPO front, India's largest power exchange, IEX, listed on the bourses today, but at a 9% discount to its issue price. Now, the stock, however, ended a day a little more than 1% lower. Jayesh Khilani is standing by to tell us why. Jayesh, the foreign institutional investors did eventually come to the rescue.
Absolutely, Shraddha, it looks like, but that will be confirmed only tomorrow when we get the delivery volume and the bulk deals, if there are any. But it was a below par listing and a close for IEX, which ended the day at about 1630 per share, compared to the issue price of 1650. Now, it did open 9% lower at about 1500, but very quickly, if you see the intraday chart of IEX, it recovered more than 100 rupees per share. Now, what we are picking up from the market participants is that the FIs have actually come to the rescue and bought in, into IEX. Now, the stock was up, or it rather recovered, nearly 9 to 10%. Backed by heavy volume. So the total traded volume was in excess of 40 lakh shares versus the issue of total that was about 60 lakh shares or odd. Now, on the last day of the IPO subscription, the company did revise its anchor book down to about 130 crores, which was originally pegged at 300 crores. Now, this was after the company, realized that the FIs could not participate in this via the IPO route and had to cut down the anchor allocation. The 170 crore differential was, however, added back to the QIB section, which eventually did get oversubscribed. But the FIs which did not get, anchor allocation would have certainly bought into the stock today, given that they would have got it at a discount as compared to the issue price. So once again, we'll be watching out for the delivery volume, which will be available tomorrow. However, we did speak with the management, and he had very interesting takes on the changing revenue mix and the increasing weight of transaction fees. Hear him out.
Going forward, transaction fee will be a larger part of the total revenue. The annual fees and the treasury income will definitely be a smaller part of it. So as the volume increases, the transaction fees will be a larger part. 2 paisa per unit from the buyer and 2 paisa from the seller is fixed from the last 6 years. And we don't intend to vary this. We intend to play basically volume game.
All right, moving on to the big earnings tomorrow. All eyes will be on Infosys as the IT giant will be reporting its September quarter earnings. What can we expect from the IT major this time around? Agam Vakil is standing by with all the details. Agam.
Well, it isn't going to be so much about the earnings, but let's get expectations out of the way. Starting off at dollar revenues, we're expecting about 3.5% sequential growth. As you can see, operating revenues also seeing about 3.5% growth there, with profits moving up by as much as 1.3%. We are expecting a contraction in margins at around nearly 23.6%, as you can see here. But the big question perhaps here will be what can be done about the guidance of whether or not we can expect a downward revision. Now, UBS is of the opinion that a downward revision of the top end of around 8.5 is already factored into the price. However, when it comes to the lower end, UBS, Kotak as well as IDFC do not rule out a downward revision, which means that we could likely see that. Of course, the question then remains whether or not that is factored in as well when it comes to the price for Infosys. What are the two factors which may bear down on not only the guidance but also some of the other results? Well, of course, we continue to see softness in BFS and retail. There will be problems in margins, because of which we're expecting a contraction because of your total value in terms of deals, and of course we're also expecting your revenue or your rupees and cross currency tail headwinds to work against your margins. But that said, what are we keeping an eye on? And perhaps the more important question is that what is going to come off Infosys' CEO search? That will be a crucial question. And other than that, what is Infosys doing in terms of strategy? What kind of changes it is going to bring? And of course, finally, in terms of client spend, whether or not we do see some amount of changes there, or because it has been so inconsistent. So these are some of the factors that we'll be watching out for. But on the whole, we're expecting a muted quarter from Infosys.
All right, thank you, Agam. Lots to watch out for, especially in terms of management commentary. And of course, Infosys numbers could set the trend or the ground as far as IT companies are concerned. But you also have HDFC Bank, which will be reporting its numbers tomorrow. It's HDFC Bank, so you don't really expect too many surprises out there. So in terms of the key numbers, net interest income is seen growing by about 20%. Net profit is seen growing by about 20% to 4171 crores. So broadly in line with the 20% growth trend that has been exhibited by the bank in the last few quarters. As far as the loan growth is concerned, is expected to come in at about 22%, broadly led by the higher growth in working capital, higher demand as far as unsecured loans are concerned, and also as far as the retail portfolio is concerned, especially given the early festive season. Asset quality trends are expected to remain stable, with gross NPA seen at close to 1.24%, which we had seen in the June quarter. Remember, the June quarter did have significant slippages coming in on the bank's agri portfolio due to farm loan waiver. So that's one of the factors to keep a watch or an eye out for in terms of the earnings. And so is the performance as far as the commercial vehicle, that is the CV and CE segments are concerned. That apart, the trends in digital banking and payments is also yet another thing that will be watched, as well as the overall balance sheet outlook growth. So that's HDFC Bank. Not too many surprises expected there. But there's also some good news coming in small businesses, which may get some more relief under the goods and services tax regime. Now, a senior government official has told Bloomberg Quint that the composition scheme currently availed only by restaurants may actually be extended to other service providers as well. Nikunj Ori, who's been tracking the story, joins in with the details. Nikunj, how will this work?
The government may consider further easing of rules for small businesses by allowing more service providers and not just restaurant owners to avail the composition scheme. Remember, under the under the composition scheme, only restaurant owners can avail the scheme, under which traders, manufacturers and restaurant owners pay a flat GST tax rate of 1%, 2% and 5% of their turnover respectively. Besides this, the government is also considering allowing claiming of input tax credit by taxpayers who buy their inputs or supplies from composition dealers or those who actually avail the composition scheme. Remember, currently under the composition scheme, input tax credit cannot be availed by taxpayers who buy their inputs or supplies from those who opt for composition scheme. These recommendations have been given. These recommendations or suggestions have been given by the group of ministers constituted by the GST Council in its last meeting, and these recommendations will be considered by GST's Law Committee in its meeting on October 24th and 25th. According to Abhishek Jain of EY, although allowing more service providers to avail the composition scheme would be a relief for these service providers, but it would be important to watch out what GST rate does the GST Council finalize under the composition scheme for these service providers, as value addition by the services sector is more as compared with trading and manufacturing. Over to you.
Thank you so much for those details, Nikunj. So November 24th and 25th are some of the dates to watch out for. But India's first line of defense against insurance mis-selling is missing a vital element. Now, 16 out of the 17 ombudsman's positions are vacant right now, according to the Office of Executive Council of Insurers. Now, Riddhima Saxena joins us with more details on the same.
Yes, Shraddha. So the Insurance Ombudsman Office has only 16 positions vacant out of the 17 that are available, and Mr. Ajesh Kumar, who is the only Insurance Ombudsman in Noida, is also due to retire in January. Insurance Ombudsman is the first arbiter of insurance complaints that are rejected by the insurer. So this is the speediest and one of the most transparent forms of grievance redressal for policyholders. And with no insurance, almost no insurance ombudsman available in the office now, this will become a problem because the volume of insurance penetration and insurance density has been increasing over time. This has mainly happened as the new insurance ombudsman's rules that were notified in 2017 did not clarify what will be the exact rules for the appointment of insurance ombudsman. And although these rules were not notified in April and the advertisement for the post of insurance ombudsman came out in July, there has still been no action from the Ministry of Finance. One of the IRDAI officials, which is the insurance regulator, who we spoke to, also told us that these rules have been drafted already by the insurance regulator and submitted to the Ministry of Finance. However, there has been no response from the Ministry of Finance yet. Back to you.
All right, thank you for those updates, Riddhima. Now let's shift focus to politics. Prime Minister Shinzo Abe's gamble on early elections in Japan pays off. His ruling coalition has retained its two-thirds majority in the lower house during Sunday's election. Bloomberg's Isabel Reynolds tells us what lies ahead for Abe in this report.
Prime Minister Abe has actually just given a press conference and he's talked about stability in terms of his economic policy and his diplomatic policy going forward. But the key thing here is to note that he does have that two-thirds majority, and what that means is that he could get distracted and focus instead of economic policy on changing the constitution, which has long been his own aim and been the aim of his Liberal Democratic Party. Now, that is a very divisive issue in Japan, so it's something that would take a lot of time, of political capital to carry out, and there's a danger, some analysts say, that could distract him from his economic priorities.
Well, with that, it's a wrap on this show. Thank you for watching.